Imagine buying a stock that everyone laughed at, watching it crash 90%, and then discovering that it became one of the greatest companies in history. Sounds impossible, but this actually happened. In 1999, Amazon was either the future of business or the biggest joke on Wall Street. And the crazy part? The people who believed Amazon would change the world were right. But many investors still lost fortunes because they made one critical mistake. They confused a great company with a great investment. Because markets don't just reward good ideas, they punish unrealistic expectations. In 1997, Amazon entered the stock market. At the time, it was just an online bookstore, a company selling books through the internet. Many people thought, why would anyone buy books online? The investors saw something different. They saw the beginning of a digital revolution, a future where people would buy almost everything online. They were right. Amazon didn't stay a bookstore. It became a global empire. It changed shopping, built one of the biggest cloud computing businesses in the world, and became one of the most valuable companies ever created. But during the late 1990s, something dangerous happened. Investors stopped analyzing the business and started chasing the dream. And history had seen this before. In the 1970s, investors created something called the Nifty 50. These were companies considered unbeatable. Businesses like Coca-Cola, IBM, and McDonald's. Investors believed these companies were so amazing that it didn't matter what price they paid. That was the mistake. Because even the world's greatest company can become a terrible investment if you pay too much. By 1999, Amazon had become one of the hottest stocks on Earth. Its market value reached around $36 billion. But there was one problem. Amazon was growing fast, but it wasn't making profits. Between 1997 and 2001, Amazon lost around $1.4 billion. Investors didn't care. They believed future success would justify today's price. Then reality arrived. In 2000, the dot-com bubble exploded. The NASDAQ crashed nearly 78% from its peak. Amazon stock fell around 90% from its highs. Thousands of investors gave up. They believed Amazon was finished. They misunderstood the story. The mistake wasn't Amazon. The mistake was the price investors paid for the dream, because the business kept winning. Amazon built one of the largest online marketplaces in history. It created Amazon Web Services, a cloud computing giant. It became a major player in advertising and entertainment. The company became exactly what many investors imagined, but many investors still didn't make money because they bought when everyone already believed the story. And that lesson matters today. Because we are seeing a similar conversation around artificial intelligence and today's biggest technology companies. The technology is real. The growth is real. Companies are creating incredible products and changing industries. But history asks one important question. How much future success is already included in today's price? Because markets have seen this movie before. A revolutionary technology arrives. Everyone gets excited. Everyone believes this time is different. Sometimes they are right, but sometimes expectations become impossible to meet. The Amazon mistake was not believing in Amazon. The mistake was believing that a great story automatically makes a great investment. The smartest investors don't avoid great companies. They simply remember one rule. A great company can change the world. But the price you pay determines your results. Nobody knows exactly what happens next. Markets could keep rising, or expectations could eventually catch up. The goal isn't to predict the future perfectly. The goal is to stay rational when everyone else is chasing a dream. Because in investing, the biggest opportunities and the biggest mistakes often come from the same place. Believing too much too early.